morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host, Mishra. Indian equity set for a muted start in absence of any positive key trigger in the F&O expiry week. First signs of mid-cap beginning to lose the outperformance essentially. If you talk about the performance thus far for the month of Feb, Nifty is up by 1.8%, mid-cap is higher by 1.1% and small cap is up by 0.7%. So clearly you could see Nifty now starting to outperform the broader counterparts here. Risk-reward ratio essentially is still remain or rather just still remains in the favor of large cap. If you ask the key question, well, is the PSU stock rising on fundamentals or only on momentum? That's something that we need to figure out and perhaps post the question to our experts out there. But the stock of the day that you need to keep a close eye out on will be Vodafone Idea. The board will be discussing in, or rather would be meeting in to discuss fundraise later today. Promoters are set to infuse the funds. Let's talk about the trade setup that we have. Well, US stock market indices gained on Monday ahead of the key inflation and economic data due later in the week, which will perhaps provide some amount of color on the amount of rate cuts that we're going to be looking at, or let's just say the interest rate scenario. In terms of GIFT Nifty, it's indicating a slightly muted yet positive start coming in for the Lal Street. It's up by 0.1%. Talk about Asian shares. Well, they've been mixed in early deals as markets await events due later this week. But let's get going with the strategies, level and the top recommendation of the day with Ajit Mishra, the SVP Technical Research, Religare Broking. Morning there.
Yeah, good morning, Nikki.
All right, how's the trade setup looking like and what's the strategy for the day? Do you think that 22,100 mark will be maintained or for that matter tested in the F&O expiry week? If that's the tested level, then what is the immediate support levels that we're looking at for the markets?
So, Nikki, after reclaiming the record highs in the last two trading session, we are seeing that a bit of a profit taking the higher levels. So it's a kind of like the underperformance of the banking, which is largely being on the sentiments, while other sectors are still, performing well. They are participating on the rotational basis. So until we see the decisiveness in the banking, I doubt that there'll be any meaningful momentum in the market. But yeah, the tone is likely to remain positive because we are still holding 21,900 that coincides with the 20 EMA. So as long as we are maintaining this level, one should continue with the buy on dips approach. When it comes to the intraday trade, any dip towards 22,100 definitely can be considered as buying opportunity, with 22,000 being the stop and 22,300 being the target area. But banking, I feel that one should refrain until we see the alignment within the private banking majors, especially the large cap names like HDFC, ICICI and XS.
During the last 2 months, Nifty has been trying to get past that 21,130 level. Sure, only in this month we've seen that finally coming through. It failed during the first 2 months, first two times. Third time it just went far above that. Any sign of retraction from here on? Any trigger that you think can lead to immediate weakness? If yes, what is that immediate level that one can look at? And also there is some sign of perhaps now bottoming out, if I may put it that way, because promoters have been selling off their stake through the block deals, multiple block deals which have been taking place for the last 2-3 weeks or so, for that matter. Mid caps, for that matter, in the last 1 month have shown a bit of underperformance as compared to Nifty. How are you looking at it?
So yeah, that's true that of late we started seeing that they are largely aligned with the index or underperforming for most of the days when it comes to the broader indices. But still we are seeing certain pockets they are holding strong. But as like you rightly mentioned, that after the almost 8-9 months of outperformance, it is natural that we'll see some bit of a profit taking in the higher level. That is what we are seeing in the broader indices. So for a time being now, as we are focusing largely on the index heavyweights for clues, in absence of any major event, the focus area should be on, the large mid-cap names, instead of the counters which were witnessing a catch-up move after this, 9 months of up move. So avoid laggards is something that we are advocating to our clients as well. And when it comes to index, The silver lining is the outperformance and the sustainability of the up move in the US markets. The US markets have been inching higher with every passing week. We have a fresh high, new milestone, 39,000 zone is something that we have crossed. So we expect that as long as we are not seeing any major reaction in the US markets, the tone is likely to remain on the positive side. But yes, the focus should be more on the large cap and the mid cap IT names, large mid cap IT names for a time being now.
Okay, quickly, just very limited time on this one. Vodafone Idea, today there is going to be a board meeting and it's essentially the stock of the day. Also Indus Tower, there is a city report on that which we're going to be talking about in detail. But your initial assessment on these two stocks, please.
So yes, we are seeing noticeable traction in Idea for almost like 3-4 months now, and of late we have retested the previous swing high close around 18.5. So once we manage to surpass this level, then short term, yes, it's a candidate that it might inch toward 22-24 levels also. But on the flip side, in case if it fails to hold 15.5, then this overall momentum might again fade away, and we'll again see profit taking, and the stock might again retrace towards 30. So as a trader, your stop should be strict at 15.5 if you have an existing trade. Yeah.
Ajit, we're just going to come back to you in just a jiffy, and we're going to chat about Indus Towers too. But right now, let's address the markets open there for you. 22,100 mark has been held on to tightly. There it's slightly breached that level, or let's just say floating around that level in early deals. It needs to be seen if 22,100 mark is maintained for the day. It's slipped below that level for now, but remains to be seen if more losses actually build on to the markets. But Bank Nifty also is down and out in trade, 46,500 mark. And if you look at the advanced declines at this point of time, market breadth clearly is in the favor of advances. Momentum building in for few stocks, but on the index level, you're seeing that completely, fair bit of mid-cap index where the trend seems to be a bit of positive there. It's a flat start with a bit of positive bias, and small cap index is showing fair bit of traction. 0.25% maintained on that one. There's a fair bit of outperformance which has come through from the small cap index. But do bear in mind the fact that in this month, we've seen that underperformance coming in from the broader indices as compared to the frontline Nifty 50. Nifty IT, on the other hand, you're seeing fair bit of traction building in for Nifty 52. But let's also look at Nifty PSU banks, and along that also look at Nifty Metal, because that's the one which has been doing extremely well in trade, right? So fair bit of traction there, and Nifty Metal Index also showing fair bit of outperformance there. 0.25% clocked in early deals for Nifty Metal Index. Top gainers and the top losers that we have on the screen for you at this time. Of course, Paytm will also be another stock that you need to keep a close eye out on. And HCL Tech, TCS and Ultratech Cement. These are essentially the top gainers that we have. Grasim, Wipro, Infosys. It is a day which is clearly led by IT stocks. Nifty IT index is something that we need to be watchful of also. UPL, Cipla and Eicher Motors, another top gainers that we have on the screen. Let's look at the top losers now, just to see the fair bit of losses coming in from Axis Bank, ONGC and Power Grid. Well, these are the top losers on the screen right there. Reliance is perhaps getting onto the bit of pressure for the markets, and NTPC and DRL2 participating into the downturn for the market. So let's just say weighing down on the losses. Let's come back to Ajit and check with him what does he make out of this. Let's pull up 197 Communication, Paytm. There is a development which is related to that, but what's his view?
So, Nikki, Paytm is something that one should avoid any trading position for a timing now, considering the kind of news flow that we are seeing. Those who are holding, yes, we are seeing recovery, and this recovery may strengthen once it manages to cross 460 mark. That's the hurdle of the short-term moving averages on the daily chart. And upside, then maybe 500, 510 could be the area where it might head to. On the downside, since we are seeing excessive volatility, do maintain a stop at 415 if you have any existing trade.
Okay. How about Indus Towers? We were also talking about that before we addressed in the market open. Why don't you, just let us know what kind of support resistance are we looking at that? Is there a buy at this level
Yes.
too? Go ahead.
Yes, so it's a long underperformance the stock had witnessed after making retesting the record highs around 2017. Since then, the stock was trading with a negative bias, though there were the phases of intermediate recoveries, but it couldn't sustain. So this time around, the kind of volume price action that we are seeing, possibility of making a sustained up move seems higher, and maybe close to around 280 to 300 positionally is something that the stock might inch towards to. So yes, one can look at accumulating the stock even at current levels. One can add more in case if it witnesses any dip around 240, and for the entire position your stop should be at 230 with a position target of 280 in next 1 to 2 weeks.
All right. I'd also want to chat about TCS because a couple of brokerages suggesting now UBS has upgraded it to buy rating finally after the kind of outperformance that has come through for TCS in the last 2 months. Perhaps, I don't know if it's right to say it's late to capture, but what do you make out on the charts?
I still feel that the IT majors have decent upside considering the phases of underperformance that we had in the IT pack in general, and TCS though it's trading at the record highs. The good part is that we are not seeing any major selling pressure. Even at the high levels, it's a normal consolidation that we are seeing at the record highs. So yes, one can definitely look at TCS for the short to medium term perspective, and if you have an existing position, one can continue to hold. As a trader, your stop should be at 39.50 if it's a very short term trade, and 42, 42.50. There's the immediate swing high that can be considered as a target area.
All right, Ajit, we are just going to leave it at that. Completely timed out in this edition, but thank you so much for taking out the time and having this conversation right here with us. All right, a couple of things actually need to be spoken about. A lot of ground. There are a lot of brokerages today initially which have actually important ones rather which have come out with the downgrade and the upgrades and also initiating. Dixon, for instance, Jefferies has downgraded it to underperform. TCS has been upgraded to buy from UPS. There is Havells, there is a Goldman Sachs which is upgraded in buy rating on Havells India. Of course, the Indus Towers report, which comes in on the back of the fundraising plans by the Vodafone, by Citi, maintaining in the buy rating. That's also the one that we need to talk about. And importantly, Cello World, where Motilal Oswal has initiated a coverage with a buy rating with a target price of 1,100. It talks about the strong brand equity and the penetration to fuel sustainable growth. It's also spoken about the building winning businesses and products and essentially strong track record when it comes to healthy financials and the ability of the company to successfully scale up new businesses and expand SKUs as well as distribution reach. CMS Infosystems, where the promoter Cyan Investment Holding will be selling in 26.7% stake. It's a big one, but the block deal is going to be taking place to worth around 1,500 crore. And you're seeing that reaction coming in, 3.5% downtick for the company. The promoter would be exiting in the stake in the company. The floor price has been set at 360, which indicates 9% discount as compared to Monday closing price. Source space information from CNBC TV 18. Andhra Cement, where the promoter has sold in 5% equity stake in Andhra Cement via an OFS on Feb 27th and 28th. Essentially today and tomorrow it's going to be selling that stake. The floor price has been fixed at 90 rupees per share. And One97 Communications, Paytm, Vijay Shekhar Sharma has stepped down as a part-time non-executive chairman and the board member has withdrawn its nominee from the Paytm payment bank boards, and the associate entity now will be reconstituting board, which essentially holds of ex-Central Bank of India chairman Srinivasan. Along with that, retired AS officer also would be one of the additional member on the board, and the former executive director of Bank of Baroda. That's going to be the mix, essentially giving out the signal that it's willing to give out that control, but whether or not that will be considered and RBI will have a change of heart is something that you need to be watchful of. But let's welcome in our guest, Dhiraj Reli, who is the Managing Director and CEO at HDFC Securities, who joins us early this morning. Morning there. How are you doing?
Good morning. I'm doing very well. How are you?
All good. Looks like the market is not really in the fine fettle as we may like it. Some signs of perhaps bottoming out. Do you think 22,100 mark has been tested today? Of course, it's an F&O expiry week, but if you look at the trend that we're looking at for the last couple of days, huge amount of block deals which have been initiated by the promoter category, which essentially have been selling off their stake into the markets. That's one. There's a fair bit of underperformance which has come through from the mid-cap index too. What do you make out of it?
I think the mid caps and small cap has run ahead of their earnings, and the valuations are a bit stretched, and that's why we are seeing some kind of an underperformance in the last week or so. In fact, in December mid, there was a consensus view from most of the brokerage houses that the mid caps and small caps will head for the corrections, but they have surprised us in the last couple of months by still continuing to be holding very strong. And this 1 week should not be an area of concern for us. 1 week correction should not be an area of concern for us. I think there are pockets of mid caps where we are seeing exuberance and the valuations are stretched. That's where the concerns are. And it would be safer or better for the investors to now take out some profits and move their money to the large caps rather than, continuing to chase the mid cap. I'm not saying there's a bubble, but the party seeming to be getting over. We are at the fag end of the party in the mid cap and small cap.
Oh, that's typically something that, it's a narrative that we've been hearing from the start of the year, and perhaps most of the fund side now recommend shifting off their funds more towards the large caps where there still is some reward left to the kind of value that they offer. Do you also belong to the same camp? If yes, within the large cap space, which sectors are you looking at? IT, pharma, is that in your list too?
Yeah, I am definitely from the camp where I see difficult to scout for an opportunities in the mid cap and small cap. There'll be some opportunities in mid cap and small cap. So I'm not brushing it that as a ruled out opportunity in the mid cap and small cap, but there are easy opportunities in the large cap space. I think banks have not performed well. Some of the large NBFCs haven't performed well in the last year or so. So that's where we see a significant opportunity. I think there are structural themes what one can look at it. We are seeing premiumization is playing out in India as a structural theme, and though the volumes are not supporting, but the consumption space will continue to improve its margin because of the premiumization space. So that's one space that has also not done well. So there are opportunities to look at in the consumption space as well. Though there are early stages, we are still seeing some stress in the rural consumption. But my take is that it's good time to start building some of the positions in the consumption space also. Of course, the IT, large cap IT, I'm not saying mid cap IT, large cap IT, definitely there are opportunities. And we've seen that the US is still going strong, and we've seen how the companies like Nvidia after their results have surged significantly. So we have seen that the IT sector particularly have navigated the many difficult scenarios, whether it was a Y2K, whether it was a Lehman crisis and so on. So they are robust cash generating business models, and with the AI/ML coming into foray, I think they'll be able to re-Christian their business model and continue to do well. And one can start accumulating some positions in the large cap IT also. We are also kind of bullish on the industrial space at large because India is a infra deficit country, and I think the government will continue to have a disproportionately higher focus on infra, and we will also see some kind of a private capex coming in there as well.
Okay, let's also talk about what would you like to essentially prefer in the large cap IT names, because today there was a report from UBS on TCS where it suggested that the leader is back. It expects TCS likely to lead its peers in terms of the revenue growth, in terms of the improvement in margins. It believes that the market is yet not pricing in the potential that TCS has. In the pecking order, within the large cap space, IT names, could you throw in through a few names there or three names there based on the valuation and the earning growth outlook?
I think our IT analysts have been liking Infosys and Persistent for long, and I think in both Persistent in particularly have done really well. There could be some more upsides left in that also, but Infosys, Persistent, and then TCS.
Infosys, Persistent, and then TCS, because there is an upgrade which is coming on TCS clearly, but Infosys leads it for you. But let's also look at industrial space. What do you like within that space? Ultratech Cement, Grasim, because it's just come up with a new segment within forayed into the paint industries, which has led to a slew of downgrades coming in for Asian Paints and other peers, where multiple reports now suggesting that paint industry is overheating or they're set for higher amount of competitiveness. How do you look at it, and any few names there?
I think without taking the names on the industrial space, I think as a sector only we like at large, and there are large cap and mid cap, both opportunities are there in the industrial space, because we will continue to focus on the infrastructure side also. There are a lot of projects that are going on which are at the fag end of the completion, which would mean that they will lead to a better cash flows for these set of companies, and some of the operating leverage will play out for these companies also. So we like this space at large.
Okay, it would have been more, helpful if you would have thrown in some names, because there's a fair bit of optimism there. But let's talk about the PSU stocks rally. That's got the market divided, right? With some of them saying that the government stocks are finally getting their due, while the other arguing that there's too much of optimism due to the momentum. So according to you, the PSU stocks rising on fundamental or only on momentum? What do you think about it?
I think it's a more of a momentum play at this stage and not on fundamentals. This was a fundamental play long ago. Right now, it's all momentum that is driving it. If you clearly look at the ownership of the PSU stocks, we haven't seen the FPIs have increasing their ownership for the PSU stocks. It's largely driven by the retail investors and HNIs. And in fact, the ownership in the PSU stocks is also has also not increased significantly, even in the domestic mutual fund space as well. So it's momentum play. I think I would like to bring in a caution here. These are the companies where we have a very less free float available. If we see the correction in the mid cap and small cap space, PSUs can have a more steeper correction. So one has to be really very, very watchful, careful to take any further positions. In fact, those who have positions can look for taking out some profits also at this stage, because most of the PSU stocks have run ahead of their valuations.
Sure. Not sure if you can talk about stock specific, but just trying my luck out there, because this is one thing which is really pressing Paytm, where it's lost in more than 44% since start of January, after RBI imposed that tripling restriction on Paytm Payments Bank. Essentially, today's development suggests that Vijay Shekhar Sharma will be stepping down to help reconstitute the board. But the stock has already seen significant amount of damage already. It's essentially sending a signal to the regulator that he's willing to give up the control. What do you make out of this? Do you think this move can probably lead to change of heart coming in from the regulators, given the reconstitution of board is now of other individuals which come from better, the employees of banks, for that matter, directors for that matter, even RBI personnel else? How are you looking at it?
The stock is not under coverage, so I won't comment on the Paytm or 197 as a company, but I can give you my perspective on these things. Whenever there is a regulatory action on some of the companies, it's very hard to take positions, particularly trading calls. And those who are looking forward for a long-term position, they'll have to see how these changes in the management and the board are playing out. I think it's a very welcome step to step down at Vijay Shekhar Sharma's level and reconstituting the board, at least showing the intention that they are looking forward to adhere to the directives of the regulators, which is positive for the startup ecosystem and some of these new age companies. I think governance has been somewhere at the, been at a question mark in some of these startup space and new age companies. With these kind of steps, improving your governance, I think it's good for the investee community at a large.
Okay, the final question that I will pose in then is, let's talk about the private sector banks. Essentially, PSU versus private banks debate. It's an age-old debate which is actually fructified, or let's just say in your face in this year and of course the previous year. PSU banks have staged in a strong comeback and outperforming the Nifty private bank index, with the PSU bank essentially delivering in a remarkable 162% since March 2022 compared to 24% for private sector banks. You think this year actually belongs to private sector banks, or you think PSU banks are still, given the kind of valuation that they demand, are better placed to give that exponential return?
First of all, I want to clarify here that when I was talking about the PSUs being, overheated, it wasn't for the PSU banks. It was defense and other PSUs, rather than, talking about the PSU banks at large. I do believe that the PSU banks are rightfully commanding their growth, and they have taken a lot of steps to clean up their balance sheet, and they are also doing right things to get the momentum going in the market. So from that point of view, if you look at it from 2018, where they had massive losses, and now PSU bank at large will do about 1.3 lakh crore of profits in this year. This is what is the projected number is. So my take is that it's a turnaround story. It is reflected in their earnings. It's reflected in their overall improving their financials, and that's why they are getting the valuations what they are getting. In fact, it is a correction in the valuation rather than they were undervalued, so they are getting the rightful valuation. There is an opportunity for momentum from here onwards also in the select PSU names also. Coming to the private sector banks name also, I think most of the private sector banks also are fairly valued. They are somewhere hovering around price to book value of 2.5 plus minus, whereas in India, we've been seeing some of the banks are valued as close to 3.5 and 4 price to book value also. So I see there is a good opportunity in the banking space here for one to look at it. In fact, it's a good theme for investors to book profits in the mid cap and small cap and move into some of these large caps, particularly banking space.
All right. Point well taken, and we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us. Some amount of fair bit of optimism coming in for the PSU bank names, but those are the ones that you need to be watchful of. Of course, 122% registered in by the PSU bank index since March 2022, and experts suggest that there is more steam to this rally, but that's all that we have in this edition of Trade. We also have a report essentially on TCS, where UBS has upgraded in TCS from neutral to buy rating. It's hiked in the target price to 4,700 from 4,050 earlier. It talks about enough drivers for the leaders to deliver in the industry leading growth and margins in FY25. But that's that when it comes to IT stocks, which have actually caught in some momentum in today's session. But with this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.